Okay, hello everybody. Welcome to Korean Atlanta Mentorship. I recently got a comment on this channel about someone 15 hours ago said started chunking 5K a month January 2024 with the HELOC and paid down 60,000 on my mortgage plus 6K on income taxes. Velocity banking works big time and hasn't impacted my lifestyle since. So I give a thumbs up and a little heart here. And I've heard other stories like that before too, so it's great that you guys are all great getting the results, and I'm wondering, like, what percentage of people who not have only watched this channel, but all the other velocity banking channels have done the strategy and gotten great results. In my channel, we have over 481,000 views, 55,000 not $1,000, 55,000 watch hours, and I think if you do the math, that's about 6.5 years. So we've got plenty of people watching the content, and I'm wondering what percentage of them, the people are like, I'm so inspired that I'm going to do this, and then what percentage of people are like just watching and watching and watching the videos almost like an addict, right? And they just can't get themselves to do it. Like I got a recent comment that I think was amazing. It's like, what banks let you do this? Right? It's like we've been covering this for 1.5 years, and it's like people are watching it for the first time and they don't know what a line of credit is. Oh, that's kind of why you keep preaching, right? It's like people, you take it for granted that you know what you know, but it turns out there's going to be an audience where it's like, what are you talking about? I was like, where have you been the last 10 years? I've been talking about this the whole time, right? And what is it that we've been talking about? Velocity banking. What is velocity banking? All it is a debt payoff strategy where you dump all of your money. So let's say you make $6,000 a month, you dump it into a line of credit and you're gonna dump all of your money into debt with the help of a line of credit. That's what velocity banking is. And the first step to doing velocity banking is you write a budget. Income, expenses, leftover savings, right? And then you do your expense breakdown. And after every single debt that you list, right? You list the balances and all the payments here. And then here you list your non debt expenses. You could combine them into one line item food, gas, insurance. So it's $2,000 a month. And our goal is to get rid of all this debt, right? And so this is what we're going to do. We're going to copy and paste, right? And I am going to do this, and we're going to have zero savings, and we're going to have income minus expenses, and that's going to be something called our cash flow. But we're going to try to increase our cash flow as much as possible in the very beginning. Okay, that's what we're going to do. All right. Now that we've done that, we're going to make this unrealistic assumption that we have access to a line of credit. And some people don't even know what a line of credit is, right? Like, what banks let you do this? And I'm like, almost all of them, right? A simple line of credit that revolves with my income going in and out. I don't want to do this with credit cards. Why? Credit cards are too much work. And that's why we get all the credit that we need, right? So I have over $579,000 in lines of credit. So what's a line of credit? All it is a financial tool where you could borrow money, pay back, and then use it over and over again. That's all a line of credit is, right? And so if you're like me and you have $579,000 in lines of credit, um, you have easy access to the bank's money, right? And a credit card is excuse me, I'm burping. I don't know. I must be like aging backwards and becoming a baby. But if oh, I don't know what I'm talking about anymore. Okay, line of credit, something, something, blah, blah. All right. So if you're like me, you go to a bank's website, click a button, and then the bank will deposit up to $280,000 in your checking account. You know how awesome that is, right? So that's a line of credit. And so a credit card is a line of credit, but it's a different type of line of credit. And that's why I say you need to get as much as possible before you ever need it. And the ultimate rule when it comes to credit is that banks don't lend money to people who need it. Banks don't lend money to people who need it. Isn't that crazy? I didn't know that, right? And so this is what we're gonna do. How do we know? Or so, first of all, let's assume we have access to 60 grand in credit lines, right? But how do we know which debts we're going to move into line of credit? So, just as a general rule, we'd like to use something called that cash flow index, right? So, let's just type in cash flow index, right? Just a basic formula of the balance divided by the minimum monthly payment. It gives you a number. Think of it as a ranking system, and the lower the number, that's the one you want to pay off. And so, just kind of like if you don't know this, credit cards are usually have the lowest number, high interest rate credit cards, as well as high interest rate short term loans, right? So we're going to pay those off quickly. And then, yeah, let's go ahead and do that. So, milestone. So let's do this $60,000 line of credit. And how much in credit cards do we have? 25, 26. And let's go ahead and sum them up. So 51,000. So we're going to do a debt transfer, right? Debt transfer. Okay. And so again, once we start to do the debt transfer, guess what happens here? Oh my goodness, we literally went from $205 to $1,968.35, right? And then we put our entire paycheck in, expenses out, and rinse and repeat over and over again. All right, so that's what we're gonna do. So G2 plus H2 minus 1968.35. And then we're going to take the average daily balance, multiply it by the interest rate, which is 0.08, and then divide by 12. So that's how we calculate the interest. And then we wait for these suckers to go down to zero. Doesn't mean we don't use our credit cards, but with our average cash flow, our credit card balance will keep going down and down and down. All right. So we see here in 29 months, it's all paid off. It's all paid off. So 29 months, 51K, right? And then now we're going to go to the auto loan, student loan, and the mortgage. And did I even set up my loan calculator correctly? Let me go ahead and check this. And this is going to be 22000 at 3%, 21000 at 4%, 35000 at 7%, and then 20000 at 3%. All right. So now what we do is we're going to put in the current month right now at 29 months. So I'm going to just do 29, 29, 29, 29. And again, I'm going to use that cash flow index to help me figure out which loans to pay off first. So I'm going to do these two auto loans. I'm going to go ahead and copy and paste the value. So let me paste the value here. All right. And so it's 23 grand. Okay. So let's go ahead and move this 23 grand into the line of credit. I'm going to do Control V, Control, do that. And so this is going to be plus 23150.19. And then guess what happens to the auto loan? And so now our cash flow is $2,750, right? And so now I'm going to just do this. And this is minus 2750.41. And I'm going to do this, and wablam, in 38 months, our two car loans are paid off. So 38 months, and this is going to be 51 plus 22 plus 21, 94K. Okay, and now it's time to tackle on the student loan and the mortgage. So we're at 38 months. So now this is 00, 38, 38. Now, why do we tackle on the student loan here instead of, in the very beginning? Because people are like really focused on the interest rates. And the reason why we tackle it a little bit later is because we're immediately cash flow focused, right? So we're going to use the cash flow index to help us as an indicator of which debts to pay off first. And then once we've recovered that cash flow, and then we go here. And then so now this is what we're going to do. We're going to attack the student loan. And usually when you have a cash flow index that's higher than 50, and there's an interest rate difference, although in this case, it's not really that big. Best to use what we call the chunking method. But in this case, because the interest rate is 8% on the line of credit and 7% on loan, it's not going to be a big deal if we put this into the line of credit. Although I feel like we might be putting a little bit money on the table. So let's go ahead and do that. So now we're going to add plus 26425.53. And then now I'm going to do this. The student loan goes to 0. And then what's our cash flow? 3156.79. All right, so 3156.79 and 3156.79. All right, so now 46 months, right? 46 months. The student loan is paid off, so 46 months. And then what is it? 94 plus 35. So 94 plus 35, that's 129K. And then now we just use the chunking method with the with this, right? And so is it 46 or 49? Did I do this wrong? 46 months, I think. All right, let me just quickly check. Yeah, 46 months. Okay, so 46 months. And so here's what we don't want to do. We don't want to move this whole 183,000 into a 8% line of credit, because if we move this 183,000 into an 8% line of credit, look at the itty bitty cash flow that we get. That's what this huge cash flow index number means. So even though we're still using an 8% line of credit, doing a chunk versus the whole thing are two totally different scenarios. And so that's why I feel like people who promote the getting a first lien HELOC are kind of irresponsible, because you're kind of turning your brain off rather than just kind of semi doing the math. And so let's go ahead and do this. $200,000. What's the current balance? It's 183,290.92, 183,290.92. And then what's the payment amount? It is 843.21, 843.21. And then what is the chunk amount? What's our income? It is, we'll just say 6,000 is the chunk amount, and 6,000 is our income. Okay, we just need a small chunk. And then what's our expenses? It's everything except for the loan we're trying to pay off, which is $2,000 right here. And then how much time? 4.1 years to pay off a mortgage. Amazing, right? And so that's what we're gonna do here. And even if we increase this, let's say we do a $10,000 chunk, I don't think it'd make a big difference, right? So 12.4, it's probably gonna go a little bit up. Let's see how much up. Yeah, like $300, right? So here's the thing. Here's what you don't want to do. A first lien HELOC replacement, because look at this. Now we paid 3 times more interest than necessary, right? So we don't want to do a first lien HELOC replacement. Why pay 3 times more than if you have to? So yeah, that's pretty much it. So I know that a lot of people watch this channel, and I'm just really curious of how many of you are actually doing the strategy, because again, I actually don't solicit feedback. Like, I don't say, how'd you guys do? But then like y'all randomly write a comment and you get excited about your results. So now I'm a little bit curious, not gonna lie. So 7.93 years, and then we are debt free, and voila. Okay. So yeah. So let me actually just look at the analytics. So if we take a look at the lifetime, 481,000 views. So this will eventually be 500,000, and then eventually get it to a million, and 55.4 thousand. Actually, let me just do this as a quick calculation. So we'll just do this right here, 55.4. So that's the number of hours, right? So 55.4 hours, and then we divide by 24 to find the number of days, right? Wait, is it 24? Hold on. Maybe I gotta do the 55,400. All right, that's the number of hours that have been watched, I believe, unless I can't do math anymore. 55 so that's the number of days, and then you divide by 365 to find the number of years. Okay. Divide by 365. 6.3 years worth of material watched. Okay. Can you believe it? And all I'm doing is just these spreadsheets over and over again. Oh my goodness. I cannot believe it. Well, that's the responsibility of someone who's a secret cult leader teaching financial freedom, or using financial freedom as an excuse to grow a cult. And if you don't believe me, well, I got a lot of people wanting to join this cult, right? Um, you have spoiled this great leader. We anticipate daily videos. We are a cult. Um, well, nah, the cult is growing. Oh, as a member of the cult, she is living my dream. Okay. Well, that's it for today, folks. Have a great day, and I'll see you on the next video.